I welcome the opportunity to engage positively and proactively in talking about housing and learning from others across Europe, and also welcome the Commissioner's comments earlier on this afternoon around ensuring in EU 2020 a commitment to investment in reducing poverty across member states. I guess, why has that gone to the end? I guess my main message is very similar to that which you've heard from many speakers this afternoon. Struck particularly by the similarities, and for France, read Britain, and for Brussels, read London, in terms of the housing conditions and some of the issues that are, and challenges that are out there. And it is bad out there, with cuts in investment, cuts in services, economic stagnation. And Claire, when she offered me the brief, asked, is this the worst ever? The worst conditions ever? And I'm not sure it's the worst ever, because if we roll back to the 1920s or the 1880s, it's certainly not the worst ever, but it's certainly up there for a couple of generations. But there are opportunities for housing to take a lead, or at least take a central role in recovery. And from the CIH's perspective, with our 22,000 members increasingly working not just in social and affordable housing, but working in private rented housing and owner occupation, and indeed in the building industry as well, as we've heard from Gillian, we'll give our perspective in the next few minutes on setting the scene. A bit more on some of the facts about the UK, particularly drilling to England, a bit more about what we're doing, particularly about working across the sector with other charities and other lobbying agencies, and a little bit about some of the actions that we want to see, which I guess will align with many other member states, but particularly in the context of investment. And I guess if I've got one message, picking up the MEP from the previous session, if I've got one message that I'm going to come back to at the end, and our magic bullet, our recommendation, is really around securing investment. What are the mechanisms for securing investment through private or institutional pension fund and other forms of investment? Because it looks like there will not be the source of public investment across member states, and certainly within the UK, for some considerable time to come. Now, our context is always of cuts, cuts, cuts. And yes, it's hard, and it's driving a fundamental change in the balance between public sector and private support for affordable and social housing, a fundamental change in the balance between bricks and mortar subsidy for building and personal subsidy through housing benefit and welfare, and a fundamental change in the balance between tenures, and I'll come back to that in a little while. So just a few more words about some of those fundamental changes. The line shows the drop in English capital investment in housing for new build and for refurbishment of public, social and affordable housing, with 2009-10 as the 100% year. And it feels, even though we're only a couple of years on, that this is medium term at least. And the speculation is that we're not going to return to anything like 100%, and probably not much more than 20% of what it was just a couple of years ago in the next decade. No one's really building. And this is feeding a propped up housing market where demand continues to outstrip supply in all markets across the country. And it's very clear from yesterday's announcement about the UK's return to recession that confidence in construction is seen as a key driver in returning, as I say, returning the UK to its double dip recession. Now, to an extent, reducing capital investment is being replaced by an increased reliance on increased rents. Now, originally, the government announced for England an affordable rent programme in the quotation marks, because there are question marks around whether a programme based on 80% of market levels of rent are really affordable. Now, originally this programme was to bridge us to 2015, but the fiscal situation may mean we need to look longer term to this kind of solution. But there is this question about whether 80% of market rent is really affordable. And there's some examples there from the different regions within the UK, particularly in London. You know, with market and private rents up in the stratosphere in many parts of London, affordable rent levels, so-called affordable rent levels at 60 to 65%, they remain out of reach to the vast majority of ordinary working people. And of course, relying more on reserves, but particularly relying more on increased rents to increase loan finance and leverage, means that we're already seeing some housing associations maxing out their loan facilities and therefore effectively, exhausting their supply of loan finance. Now, of course, there's not anything particularly wrong from a financial perspective in reducing reliance on capital investment and increasing reliance on rents or support for rents, but not, definitely not, at the same time as a major programme of housing benefit and welfare reform which is being delivered in the teeth of a recession and increased unemployment. Now, our welfare housing benefit reductions are in a range of measures through housing benefit caps, which particularly affect London, a reduction in eligibility across the board, particularly if you live in a house that's too big or so-called too big for you, lower increase in the future compared to the likely increase in rents, and the introduction of a bundled up universal credit, delinking housing benefit support for housing from the cost of housing for the first time in decades. And it's not just housing benefit as revenue expenditure that's suffering. Supported housing, support for the vulnerable and the elderly, also, and I've used the word slashed, and it's a very emotive word, but we're seeing 60% cuts in supported housing expenditure. And we're only just beginning to see the consequences because we're only 26 days into the new financial year. And just to say some of the impact of those housing support or benefit reductions, if we take the whole basket and look at the combined impact of housing benefit reductions in England and forward project where we expect affordability to be for ordinary people and people who are on benefits, people who are on benefits, the red areas are likely to become unaffordable within the next decade for people who are on benefits, because rents will have outstripped the level of housing support so significantly. And there will not be many areas of England that are left untouched by this tinge of unaffordability well into the future, 15 to 20 years in the future. Just some examples there of the loss of housing benefit for people, single people up to the age of 35. £87 a week if you're in a single bedroom property in London, you will lose potentially in housing support if you're unemployed. You simply won't be able to live in London. And of course, as has been rehearsed many times this afternoon, for the first time in 15 years, we're seeing a very clear trend in rising homelessness, in reducing the number of hostels, a squeeze on temporary accommodation. For the first time, seeing a rapid increase, for the first time for a long time, a rapid increase in very expensive solutions for housing homeless people. Now, of course, those of you that follow UK government politics with interest will know that the mantra is private sector-led recovery. And I guess our version of private sector-led recovery is the private rented sector, or could be seen to be the private rented sector. And it's not. Interesting, with all the debate that's gone on around owner occupation and people promoting owner occupation, it's not the promotion of owner occupation per se, it's the growth in the private rented sector. Some entry-level facts. The sector has doubled in the last 8 to 10 years, predominantly as a result of the deregulation of rents. And the top-end predictions are that the private rented sector could be as much as a quarter of all housing across the UK, not just England, within the next 8 to 10 years. Now, partly the increase in the private rented sector is mirrored by the reduction in owner occupation, which has led to a short-term policy response from the UK government to England about promoting or re-promoting the right to buy. But of course, such a rapid growth in the private rented sector brings all sorts of big issues around standards and the levels of rent. First, on standards, big implications in terms of housing standards, property standards, and standards of management from a sector that is still mainly landlords of 1, 2 or 3 properties. And on rents as well. Now, we've had some debate in the press and in the media recently around what some of the changes are in policy and what impacts they're having on private rents. Well, our evidence is, and Martin's magazine has joined this campaign of evidence gathering as well, our evidence is that private sector rents are growing, they're going to continue to grow, and as benefits are restricted, this will exacerbate poverty, exacerbate vulnerability and challenge. So some of the key consequences for us then are around supply and funding, the big issue for today, of course. Well, here, we've got the lack of supply. Bank lending is a big issue for housing associations. The one chink of light, as far as England's concerned, was the municipal council housing sector, which has moved from a very detailed national system to a more localised system very recently, literally within the last month. And that will give us some opportunities to invest in the asset base, but will ultimately be constrained by the fact that it counts as public debt and public investment. And the UK government has tried modest interventions to stimulate home ownership, but they are a drop in the ocean, particularly in terms of adding to supply. We've got the whole move towards localism, to planning reform, for deregulation, and a whole move away from almost like central government beginning to sort of say, well, it's your local problem. And that will result, along with all of the other measures, with worsening social conditions and more social tensions. And that kind of returns me to my main theme, really. We've been talking for 20 to 25 years in our country about the silver bullet of getting institutional pension fund, insurance, company investment into affordable housing. It's been slow enough to get into market rented housing, into private rented housing, and we've not seen it on any meaningful scale, not any scale at all, really, for affordable housing as yet. Now, we need to address the need for capital market returns. Now, private equity houses will look for 15% a year. We're not going to achieve that. Can we develop an institutional model that will deliver the kind of 4, 5, 6% annual returns that some of the pension funds and institutional investors are looking for on average? And if we can, we may be able to recognise housing as a driver for growth for the very long term, because generally pension funds and insurance companies want to put their money in for medium to long terms rather than short-term private equity. So again, just to reinforce that message around securing investment, tackling the need for the markets to make the kind of returns that they need to make. By levering institutional investment seems certainly to us at the CIH to be key to unlocking a meaningful long-term growth in the supply of housing. So my question to leave this conference with, and for us to I guess picking up the previous question about the one single recommendation you would make. And I think Christophe mentioned it as well from France earlier on. One of his 4 pillars was investment with safeguards. Is there a role for governments at all levels, maybe, to guarantee minimum returns, to offer some risk mitigation, to offer tax breaks, perhaps through real estate investment trusts and other such things? Could governments act as brokers to research, to facilitate, to swap best practice? We've a really good idea that the money's there. How can we make it happen? And just finally, to leave you with a hobby horse of mine. You know, housing drives construction, drives jobs. We've heard that from Gillian, the evidence is there. We also know that housing is a key driver for health. Let's not forget, £1 on housing saves £3 on health. And we're beginning to see some evidence that because for the first time in generations health services are being cut in the UK, of some other services beginning to listen to that argument about investing in housing can deliver savings elsewhere in health and other services. And it seems to us that that's an argument and a case that can be made across Western Europe as well. Thank you very much.